Good evening, ladies and gentlemen. Today is the 3rd of May, and after having a break from the Black Monday series last week, today looked to be another one of those days where we saw a gap down below 14,500, and that led to a massive put side premium expansion. And more or less, the trade plan for the day was to benefit from the IV spike cooling off. There was a mistake that I made wherein I had a very bad entry because while I did benefit from the put side IV cooling off, the calls had lost a lot of value, and them regaining that value really started to hurt my position. To adjust for that fact, I took in additional put side credit, and you can see how the management of that went. And I also trailed my stop loss since at that point I was down about 7 points or so. So from that stage, at a point where you will find in today's trade that I broke my trade once in between, where I expected that the calls would expand quite rapidly due to the IV expansion if we started to test Friday's low. I actually broke out of the trade and I re-entered the trade when the risk reward seemed more attractive to be in a straddle position. Considering that it's a Monday, at one point I was up about 11 points, and that is when I decided to call it a day because I'm not expecting too much of a further fall off in strangle premiums, especially on a Monday. So there was a good amount of crush on the premium side, and sitting on a gain of 11 points is upwards of 1% on the margin used, and I used that to more or less call it a day because the risk reward for a strangle was not very attractive. And being a Monday, you generally will not see some kind of a massive fall off in premiums as well. So that being the case, I hope you had a good trading day. It was once again one of those tricky days. We gapped down, everything seemed to be negative, and then everyone goes short and goes short with a very bad risk reward. So generally in a falling market, shorting is very risky because the market is already pricing in the down. So calls are already very cheap, puts are already very expensive. So if you want to buy puts or short calls, you're already at a disadvantage because that's what the market is pricing in. There's already a lot of fear. And given the kind of down moves we've seen due to COVID related issues, and now there's some more talk again about lockdown, you will see that put side premiums can really go to the roof and calls might lose premiums immensely. But then all of that is undone the moment we stay stable or we make a slight up move. So all that being the case, I also have some positional trades that are open, and I've addressed some of that in this video. Positional trades and how you approach them is very different from intraday trades. You cannot over adjust and adjust too quickly, try to micromanage a trade every single day of the week. So I've covered some of that in this video as well. Thank you so much for watching. I hope you had a good trading day, and I will catch you next on Tuesday, which is tomorrow.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The pre-market has just settled and we're having a 1% gap down. The idea will be to let the market settle for a bit and then probably try to short the IV on the put side. We could have potentially more downside from here. A lot of longs might start to get unwound. So I'll probably take my time in entering a position. I've also entered a positional trade on a few companies. Bandhan Bank had gone over on Friday's video. I also created a bullish strangle on HDFC Bank, a short straddle on IndusInd Bank on Friday because the results were due, and a bullish strangle on TCS as well. I think initially these will bleed a little bit, but will not be in a hurry to adjust them right now as there will be a big IV spike. So the horizon for this trade is over the course of a month, so will not be too aggressive with the adjustments unless there is some kind of a big move. So 3 minutes to market open, we'll keep you posted. Okay, so a very bad entry. The idea was to short the put side IV when it expanded at the gap down, but completely misexecuted it by also shorting the 14,800 call at a big IV cool off on the call side. That reversed very quickly and started to burn on the call side. And now to balance that, have moved up the puts. So more or less lost a couple of points to misplaying the entry, but that being the case, still not terribly bad, a little more than 5 points that has been taken in damage due to that. So the rest of the day, the idea will be to hold this range because it more or less sits well with the price action as well as the open interest. And we'll keep a stop loss of about 5 points trading from here. We'll keep you posted. The time is 9:36. 10 o'clock update. Basically, the dip got bought very rigorously. At one point, these puts were trading at 100. They actually opened at 100. But yeah, the call side reversal did burn us a little bit, but more or less has now been compensated by the fall off in put side IV. Currently, this has a 600 point range, and we are finding that Reliance continues to head down and Bank Nifty more or less flat sentiment after the open. A lot of the strength after the gap down has come from IT. So for now, this range looks good. The only adjustment that we'll have to make is if we then start heading to yesterday's close. So if we start heading to around 14,600, then we'll have to risk manage the calls by moving them further. For now, not much to do. I think this range should be more or less good for the day. Okay, so while we have some time, we'll go over some of the positional trades. So this Bandhan Bank trade is absolutely nothing happening. It made a down move today, but not going to make any adjustment. I'm going to wait for this 300 to get tested. In case 300 gets tested, I'm going to create an iron fly at 300. That is the plan. Not much else happening there. Then, yeah, HDFC Bank bullish covered triangle. We entered this on Friday when HDFC Bank was more or less here. So not much happening, just not much of a change actually. So I'm going to continue to hold this position as is. The idea is if it slides down also, we'll just move down a call little by little, not immediately make it a short triangle. I think we've got a whole month left to go. And yeah, entered this position more or less when the strike was at the money. So that's why you're not seeing much of a difference. A little bit, but not much. IndusInd Bank took a short straddle because the results of their results came out. You would think IV would crash, but IV really has not crashed. In fact, in the morning when we opened until like half an hour, we were negative on both. The IV had actually gone up, even though IndusInd Bank is perfectly centered around a short straddle. Yeah, we'll continue to hold this one up. IV remains high. Yeah, TCS bullish triangle, more or less. TCS is in the green today despite the Nifty up move. So this is good. We're basically going to continue to hold. Not much to do. So the difference in mentality between an intraday trade and a positional trade is a positional trade opens up a lot more options. You can add additional spreads, you can adjust existing spreads, you can roll forward certain positions to different expiries, you can do calendar hedging when required. There are all kinds of possibilities. So you should never and you never want to do adjustments of existing positions when there is a spike in IV. So that's not a good. Whenever there's a big move or whenever there's a spike in IV, unless it's starting to really affect you on a mark-to-market basis, shouldn't be in a rush to do any adjustments, which is why none of these positions need any kind of adjusting. At this point, you can't take the intraday approach of adjusting on a point-to-point basis with positional trading. So yeah, that being the case, the intraday trade so far looking all right. We are seeing a lot of positions built up around 14,500, and we've kept a range of 300 in either direction from 14,500. So we'll keep you posted. Whole day left to go. Okay, so what I've done is I've exited the short positions completely for now. I exited the 14,800 call at 47, 48, 49. The 14,200 put around 31, 31.3, 31.8 and so forth. Well, what is the idea? Idea is we'll now be testing yesterday's close, and that will lead to a call side expansion. Puts lost an immense amount of value, and now they're not losing any more value. That's exactly why I exit, because I'm not expecting these puts to lose a tremendous amount of value, whereas the call side IV will expand massively as we start heading towards 14,600. So if you see, the idea is when I exit this together, so if you say 48 and 31 was trading at around 79.80, whereas now the calls are expanding, but the puts are not doing anything. These calls will continue to expand as long as we see, until that test happens. These puts will only decay once we test that level and then make an up move. Also, it's an imbalanced position to sit on. So that being the case, have ditched on both sides. So because even if I had just exited the calls in anticipation of this and there was a down move, then once again get burnt on the reversal by the puts, gaining a lot of value very quickly. So for now, just exited the entire trade. I look for an opportunity to re-enter depending on what happens in the next 15 minutes. Okay, have now re-entered the trade by shorting the 14,850 call, which is 300 points away, and once again shorting the 14,200 put at 34.35. So we'd actually exited this at 31 change, but now that prices have started to normalize, once we took some kind of resistance here, then the idea behind exiting was the put side prices fell off way too much. They absolutely crashed, and yeah, did not want the reversal to then hurt us. From the time we exit the 14,200, 14,800 straddle, it's actually gained in 2.5 points. So that's good. And now we've re-entered with a slightly different risk spread, keeping it slightly negative in delta, where a downside move till 14,525 should actually benefit us. But it's also taken into the fact that call side IV was quite high after that up move. So once again, back in position. What's the idea here? We'll wait for this in case we start heading down. It's basically a trend line here. We'll see what happens, and if we once again head to the day's high, we'll have to risk manage the call side. But yeah, we'll keep you posted. It's almost 11 o'clock. We have the whole day left to go. We're sitting on a 650 point strangle, and yeah, the premiums are okay. They're not particularly great. Okay, today's a Monday, and technically from the lows we've already we're up close to 10 points, 17 points from the lows. I am not expecting too much of a fall off of premium to happen for the rest of the day. So I'm using this Q, some stability in the market, to cut out of the entire position. I'll go over in a second as to why. Hate it when you can see the slippage happen in front of you, and that's with like a slow exit. Okay, done. We've exited all the intraday trades, and I'll go over why. Okay, few things. This is a Monday. We gapped down. We opened with put IV going through the roof, and calls losing immense amount of value. We shorted puts, we shorted calls started bleeding, but we managed by balancing from the put side, and the put side IV fall off was good enough to take care of the fact that these calls were starting to bleed. Now, we then made an up move, and at this point we exited because the call side IV was going to spike and the puts had lost a lot of value. At the point when we exit, these puts were trading at 30. And the call spiked up all the way to 50. We exited at 31 and 48 on the puts and calls respectively, because let us see what happens here. If we move up, the calls continue to expand, they continue to get covered, whereas the puts have lost so much value that they're not going to continue losing. If there's a reversal, yes, at that point it does benefit, calls will lose value, but the puts will more or less also gain value. Essentially, a lot of people who purchased puts got stopped out, due to which the price of puts fell so immensely. At that point, it was fine. Once we got rejected, once again we re-entered the trade with a slightly different risk reward, and as we made this down move, put side IV continued to go up, and calls lost quite a bit of value again. So these we shorted the 14,850 at around 36.5. They went down all the way till 29. Put started expanding again. Now we have this up move, and honestly, I have a feeling with the kind of shorts that have been built in the system, it's very likely that we now head higher and probably touch Friday's close. So at that point of time, my risk reward for this triangle is not very good, because puts don't have too much value, calls are not going to lose too much value because they're already priced lower, and a up move from here will really expand the calls. So that and today being a Monday, you're not going to see some big fall off in prices. It's not going to happen. And yes, this triangle might lose another 3, 4, 5 points even easily, and we'll have to see towards the end how right or wrong I am about this. So the 14,200 and 14,850 triangle country trading at you can say 66 or so might lose a little bit more value towards the end of the day, but that's fine. I think for a Monday, overall it just made sense from a trade perspective. It just wasn't so attractive to stay in the trade. So all that being the case, of course, had 1 point of slippage almost in exiting, and like you can see from the time I started to exit and ended the exit process, we were down by a point, and that's perfectly normal. There's nothing happening with our positional trades. I've already gone over what adjustment is going to be done to the Bandhan Bank trade in case we keep getting burnt on the both side. HDFC, nothing to be done. HDFC Bank, IndusInd Bank as well, nothing. We're just shorting the IV. And TCS as well. TCS is going all right. The bullish triangle is going all right. So in a way, you can also say that we took one position in IT and we took 3 in banking. So those are, sometimes people will call them pair trading and whatnot. But basically different sectors. IT would be a defensive, banking, if the economy starts to tank, gets completely killed. So that should be the end of the day. So I have some other work as well, so I'll not be taking on any further trades for today. Thank you so much for watching. I will catch you tomorrow. Have a great day. I hope your trading day was good.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.